Oil just broke $110 per barrel, and every analyst is saying the same thing. $6 gas is coming. If you filled up your tank this week and thought it was expensive, just wait, because what is about to happen to gas prices will make today look cheap. Oil was $70 per barrel 3 weeks ago, then it hit 100, then 105, now 110, and it is not stopping. The Strait of Hormuz is still closed. Iran is still attacking tankers. Countries are still releasing emergency reserves, and it is not helping. Analysts at Goldman Sachs just put out a report saying if this continues for 2 more weeks, oil will hit 130. If it continues for a month, oil will hit 150. And if the war escalates further, oil could hit $200 per barrel or more. Subscribe right now, because $6 gas is not a prediction anymore, it is a mathematical certainty. By the end of this video, you will understand exactly why oil just broke 110, what happens when it hits 130 or 150, how that translates to gas prices at the pump, what $6 gas means for your budget and the economy, and whether there is anything that can stop it. Let me start with what happened overnight, because oil markets just had a massive move. At midnight Eastern Time on March 17th, Brent crude oil was trading at $103 per barrel. By 6 a.m. it was 108. By noon it hit 110. That is a $7 jump in 12 hours, the fastest intraday move since the war started. Comment below if you watched gas prices jump overnight and wondered what was happening. What caused the spike? 3 things. First, Trump announced he might bomb Iran's Karg Island within days. Karg Island is where 90% of Iran's oil exports ship from. If the U.S. destroys it, Iran's oil revenue disappears. But Iran already warned if Karg Island gets hit, they will attack every oil facility in the Gulf. Saudi Arabia, UAE, Kuwait, all of them. That would take 40 to 50 million barrels per day of production offline. Oil traders heard that threat and started buying oil futures. If you think oil is going to 150 or 200, you buy now at 110 and make a fortune. Share this video with anyone who thinks oil prices have peaked. Second thing that happened, Reuters reported overnight that 2 more oil tankers were hit by Iranian missiles in the Gulf of Oman. One tanker was damaged, the other caught fire. No casualties, but the tankers are out of service. This proves that even tankers trying to avoid the Strait of Hormuz by going around it are not safe. Iran has long-range missiles. They can hit ships anywhere in the Gulf. So shipping companies are pulling back even further. Fewer tankers means less oil transported, means higher prices. Third thing, China made a statement. The Chinese Foreign Ministry said China is concerned about oil supplies and is considering intervening to protect its economic interests. Type China. If you think China getting involved makes this crisis way more dangerous. That is vague but scary. What does intervening mean? Are they going to send warships to the Gulf? Are they going to negotiate with Iran? Are they going to side with Iran against the U.S.? Nobody knows, but the uncertainty alone is enough to spook oil markets. Traders do not like uncertainty, so they buy oil as a hedge. All 3 of these things happened in the span of 12 hours, and oil jumped $7. Now let me show you the math on what $110 oil means for gas prices. The rule of thumb is every $10 increase in oil adds 20 to 25 cents to gas. Subscribe if you want to understand the economics, not just see scary headlines. Oil went from 70 to 110. That is a $40 increase. Multiply 40 by 0.022, and you get 88 cents. Gas was $2.93 3 weeks ago. Add 88 cents, and you get $3.81, which is almost exactly where gas is right now, $3.72 nationally. So the math checks out. Now let me show you what happens if oil keeps climbing. If oil goes to 130, that is an additional $20 from today. 20 times 0.022 equals 44 cents. Add that to 372 and you get 416. So $130 oil means $4 gas nationwide. Hit that like button if $4 gas sounds terrible, but you know it is going to happen. If oil goes to 150, that is $40 more from today. 40 times 0.02, 2 equals 88 cents. Add that to 372 and you get 460. 460 is almost $5. If oil goes to 175, that is $65 more. Times 0.022 equals 143. Add that to 372 and you get 515, over $5 nationwide. And if oil hits 200, like some extreme scenarios predict, that is $90 more. Times 0.022 equals 198. Add that to 372 and you get 570. Comment below if you think 570 gas will destroy the economy. But wait, it gets worse. These are national averages. Some states are way higher than average. California is already at 450. Add the same increases and California hits 620 at $150 oil, $7 at 175 oil, 770 at 200 oil. New York and other expensive states will be similar. So when I say $6 gas is coming, I am not exaggerating. In high-cost states, it is mathematically certain if oil hits 150 or higher. Now let me tell you why oil is going to keep climbing. Share this if you live in an expensive state and are terrified of $6 or $7 gas. The Strait of Hormuz is closed. 21 million barrels per day are not flowing. That is the biggest driver. As long as the strait is closed, oil prices will stay high or go higher. When will it reopen? Nobody knows. Trump says the war will end soon. Israel says they have at least 3 more weeks of bombing. Iran says they will not negotiate while being attacked. So the strait could be closed for weeks or months. Every week it stays closed is another week of high oil prices. Second reason, countries are running out of emergency reserves to release. Type reserves if you think releasing emergency oil was a temporary fix that is running out. The U.S. already released 172 million barrels from the Strategic Petroleum Reserve. Other countries released another 230 million. That is 400 million total. Sounds like a lot. But remember, the world consumes 100 million barrels per day, so 400 million is only 4 days of supply. It helped for a week or two. Prices dropped from 120 back to 103, but now they are climbing again because the reserves are running low. The U.S. cannot keep releasing oil forever. We only have about 192 million barrels left in the SPR. Subscribe if you think we are going to run out of reserves before the war ends. If Trump releases more, we could hit the minimum strategic level below which it is dangerous to go. Because what if there is another crisis after this one? What if Saudi Arabia gets attacked? What if Russia cuts off more supply? We need some reserves for future emergencies. But if Trump does not release more oil, prices will keep climbing. He is stuck. Third reason. OPEC is not increasing production. The Organization of Petroleum Exporting Countries controls a huge chunk of global oil supply. If they wanted to, they could increase production to make up for the lost barrels from the Strait of Hormuz. Hit that notification bell because OPEC is choosing not to help, and that tells you something. But they are not doing it. Saudi Arabia, UAE, Kuwait, they all have spare capacity. They could pump more oil, but they are not. Why? Because high oil prices are good for them. They make more money. Their budgets depend on oil revenue. At $70 per barrel, Saudi Arabia barely breaks even. At $110, they make huge profits. So OPEC is happy to let prices stay high. They will not increase production unless prices go completely out of control like 150 or 200. And even then they might not because they do not want to crash prices. Comment below if you think OPEC is screwing over the rest of the world to make more money. Fourth reason. Demand is not dropping. You would think high prices would reduce demand. People drive less, airlines cut flights, businesses use less fuel, but that is not happening yet. The price increase is too recent. It takes months for demand to adjust. Right now, people are still driving to work, still taking vacations, still buying stuff that gets delivered by trucks. Demand is the same as it was 3 weeks ago, but supply is down 21 million barrels per day. So you have the same demand trying to get satisfied by less supply. Economics 101. Prices go up. Share this if you think demand will not drop until gas hits $6 or $7, and people literally cannot afford it. Fifth reason. Speculation. Oil traders are betting prices will go higher, so they are buying futures contracts. When lots of people buy futures, the price goes up even if actual supply and demand have not changed. This is what happened in 2008 when oil hit $147. A lot of that was speculation. Traders thought it would keep going up, so they kept buying. Same thing is happening now. Every hedge fund and commodity trader thinks oil is going to 150 or 200, so they buy now. And their buying pushes prices higher. It becomes a self-fulfilling prophecy, type speculation. If you think Wall Street is making oil prices worse by betting on them going up. Now let me tell you what $6 gas means for your life. First, your commute becomes unaffordable. If you drive 50 miles round trip to work 5 days a week, that is 250 miles. In a car that gets 25 miles per gallon, that is 10 gallons per week. At $6 per gallon, that is $60 per week, $240 per month, $2,880 per year just to get to work. That is more than a lot of people can afford. Some people will quit their jobs because commuting costs more than they make. Subscribe if you think $6 gas will force people to quit jobs or move closer to work. Second, road trips become impossible. A family vacation that involves driving 500 miles each way, that is 1,000 miles total. At 25 mpg, that is 40 gallons. At $6, that is $240 just for gas, plus hotel, food, activities. A lot of families will cancel trips. The tourism industry will collapse. Hotels, restaurants, attractions, all of them depend on people driving places. When gas is $6, people stop driving for fun. Third, delivery costs explode. Amazon, Walmart, every company that ships products will raise prices. Hit that like button if you think $6 gas kills the economy. A delivery truck that burns 50 gallons of diesel per day. At $6, that is $300 per day in fuel costs. Multiply by 300 working days per year, and that is $90,000 per truck per year. Companies will pass that cost to customers. Your Amazon Prime membership will cost more. Shipping fees will go up. Everything you buy online gets more expensive. Fourth, food prices skyrocket. Farmers use diesel to run tractors. Trucks use diesel to transport food. When diesel hits $6, the cost of producing and moving food goes way up. Comment below if you have already noticed food getting more expensive at the grocery store. Groceries that cost $100 a week might cost $120 or $130. Over a year, that is an extra $1,000 to $1,500 in food costs per family. A lot of people cannot absorb that. Fifth, airlines go bankrupt. Jet fuel prices track crude oil. If oil hits $150, jet fuel will be insanely expensive. Airlines will add huge fuel surcharges. A $300 ticket becomes $500. Business travel stops. Tourism stops. Airlines cut routes. Lay off workers. Some will go bankrupt. We saw this in 2008 when oil hit $147. Several airlines collapsed. Share this if you think the airline industry cannot survive $6 equivalent jet fuel prices. Sixth, the stock market crashes. High energy costs hurt every business. Companies have higher expenses. Consumers have less money to spend on non-essentials. Corporate profits drop. When profits drop, stock prices drop. We could see the market fall 20 or 30%. Your 401k loses a third of its value. Retirement savings get wiped out. Seventh recession becomes inevitable. When gas is $6, consumer spending collapses. People only buy necessities. No restaurants, no new clothes, no electronics. Businesses see revenue drop, they lay off workers, unemployment rises, GDP contracts, we enter a recession. Type recession. If you think $6 gas guarantees an economic crash. This is not fear-mongering. This is what happens every time oil prices spike this much. 2008 oil hit $147 and we had the worst recession since the Great Depression. 1979 oil spiked and we had stagflation for years. High oil prices destroy economies. Now let me tell you what can stop this. Option 1, the war ends and the Strait of Hormuz reopens. This is the only real solution. If tankers can start moving through the strait again, 21 million barrels per day come back online. Supply increases, prices drop. Subscribe if you think ending the war is the only way to stop $6 gas. But as we have covered, the war is not ending anytime soon. Trump says soon. Israel says at least 3 more weeks. Iran says no negotiations. So this option seems unlikely in the near term. Option 2 countries release more oil from reserves. The U.S. could release the remaining 192 million barrels from the SPR. Other countries could release more. This would add maybe another 400 million barrels to the market. That buys another week or two of lower prices. But then the reserves are empty and prices go right back up. This is just delaying the inevitable. Hit that notification bell because option 2 only works for a very short time. Option 3, OPEC increases production. Saudi Arabia and UAE could pump an extra 3 to 5 million barrels per day if they wanted to. That would help offset some of the loss from the strait. But OPEC has made it clear they are not doing this. They like high prices. They are not going to save the global economy at the expense of their own profits. So this option is not happening. Option 4, demand destruction. If prices get high enough, people stop using oil. Drive less, fly less, buy less stuff. Demand drops. When demand drops, prices stabilize or fall. Comment below if you think demand destruction is the only realistic outcome. But demand destruction means economic pain. It means people changing their behavior because they cannot afford not to. It means recession. So this option stops $6 gas by destroying the economy. Not exactly a win. Option 5, the U.S. invades Iran and takes control of their oil fields. This is the crazy option, but some people are suggesting it. If the U.S. military occupies Iran's oil infrastructure, we could force production to continue and ship oil out even during the war. This would add 3 million barrels per day back to the market. Share this if you think invading Iran to take their oil is insane but possible. But this requires a ground invasion, tens of thousands of troops, years of occupation, massive casualties, another Iraq war. Nobody wants that. Even the most hawkish politicians are not seriously proposing it. So this option is off the table, which means there is no good option. The war continues. The strait stays closed. Reserves run out. OPEC does not help. Demand takes months to adjust. And oil keeps climbing toward $150 or higher. $6 gas is coming and nothing is going to stop it. Type unstoppable if you think $6 gas is inevitable at this point. Let me tell you what you should do to prepare. First, cut all unnecessary driving immediately. Carpool, work from home. Combine trips. Every gallon you save is $6 in your pocket. Second, if you can afford it, trade in your car for something more fuel efficient, a hybrid or electric vehicle. The upfront cost is high, but at $6 gas, it pays for itself in 2 or 3 years. Third, stock up on non-perishable food now before prices go even higher. Buy rice, beans, canned goods. Stuff that lasts. Because grocery prices are about to jump. Subscribe if you want practical advice on surviving $6 gas. Fourth, cancel any non-essential travel. Road trips, flights, vacations. It is going to be too expensive. Save that money for gas and food. Fifth, if you have investments, consider moving some to cash. The stock market is going to drop when the recession hits. Protect your retirement savings. Sixth, talk to your employer about remote work. If you can work from home full-time or even a few days a week, you save on commuting costs. This is not optional anymore. This is financial survival. Hit that like button if you are already making budget cuts to prepare for what is coming. Let me give you the bottom line. Oil just hit $110 per barrel. Analysts are predicting $130 within 2 weeks, $150 within a month, $200 if the war escalates further. Every $10 oil goes up, gas goes up 22 cents. At $150 oil, we are looking at $4.60 gas nationally. At $175, we hit $5.15. At $200, we hit $5.70. In expensive states like California, add another dollar. $6 gas is not a maybe, it is a when. If this video helped you understand what is coming and how to prepare, smash that like button and share it with everyone you know. The Strait of Hormuz is closed. Reserves are running out. OPEC will not help. Demand has not adjusted yet, and there is no realistic option to stop oil from climbing. $6 gas is coming. The economy is going to crash. People will lose jobs. Businesses will close. We are headed for a recession, and there is nothing anyone can do to prevent it. The only question is how bad it gets and how long it lasts. Prepare now while you still can.